This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe. I'm going to give you a stock market update for Friday morning. So pretty big shift this week, not just in the price of the market, but there was a major shift in one of the indicators that I look at and have been looking at for over 30 years. I definitely think it's worth talking about because it was one of the biggest 1 week moves I've ever seen. We'll also go through the other market indicators and see what's really taking place here, see how important this reversal is, and define kind of the key levels. All right. Now, if you want to learn more about these techniques, I would suggest starting with the book. You can go to rabilstockresearch.com/book for more information. Also, if you enjoy the content, please hit that like button and also subscribe. Okay, so we're going to start out and spend a few minutes talking about the sentiment. All right. Now, I usually start with that anyway, but it's made a pretty big shift, and it hasn't really taken that long. We were negative about 3-4 weeks ago as this was peaking up here. And it was also negative. It was up in the 40s here, and it was up in the 40s here. Okay. It's given some really good signals over the course of the past year when the number of bulls is 40 to 40, I think it's 45% higher than the bears. It's right around the mid 40s, mid to high 40s. And when we get up into that mid to high 40s in a bull market, you reach a little bit of a higher risk danger zone looking for a pullback. Now, usually the way this plays out is when we get overdone, like when we pull back, we're looking to see a drop in the number of bulls minus the bears. So this number to drop down into maybe the low 20s, right around the 20 level in a bull market, when we're in a bull market. All right. Now, if we're in a bear market, we actually want this to flip negative. We want to have more bears than bulls. So, the argument could be made that this is just a pause point because this has to go negative. All right, we're at plus 10 and that we're going to go into a bear market. All right. And I'm kind of the argument that I'm a big contrarian. So I'm a big believer that we want to be more cautious when everybody's bullish at these levels. Okay. But everybody flips so fast. I mean, that is a huge drop. 1 week drop. I've never seen this indicator drop this. I've been following this since right around 1989. I've been watching this weekly for a long, long time. And I don't think I've ever seen a single week drop this abruptly. Now, over the course of a month, I've seen a pretty big drop, but not over the course of 1 week to the next. So I think it's pretty important. Just a lot of people threw in the towel, everybody kind of jumping on the bandwagon, thinking the market's going to go down. And whenever that happens, then that's probably not what's going to take place. Now, it doesn't mean we're going to turn on a dime and take off either. And this is a secondary indicator. It's not a primary indicator for me. The primary indicators, and this is the reason why I do it this way. These are the primary indicators, trend and momentum. And then these bottom indicators are just market conditions that we want to keep an eye on. Sentiment, overbought, oversold, and then the volatility on both the weekly and the daily. All right. And I would put them in order here. Trend most important, momentum second most important, volatility next in importance. And, I would actually probably put the sentiment above the overbought, oversold because this can move kind of quickly. But the sentiment would probably go next and then the overbought, oversold. But the bottom line is that it's not necessarily a primary indicator, but there are times when I want to watch this. I want to look at this and see what's taking place and say, you know what? I mean, I probably need to respect this a little bit. Now, we're going to need a little follow through. I do think we need to get through the 600 mark. We'll go into that when I get into the individual timeframes, but I do want to just let you know that I think this is a pretty big deal. It neutralizes a lot of what we're seeing in terms of the loss in the ADX strength and the loss in the momentum based on the RSI as well. So it's possible that we could turn into a range now rather than have a big drop. So I still think going up from here, I mean, we could go to a marginal new high, but I don't know that we're looking at a new trending move right now in the position we're in based on the momentum conditions. All right. Now, right now, let's just go through these first. Monthly, weekly, positive still. The trend is still positive. I know this Some of you guys might have moved this to neutral, and I'm okay if you did that. I'll go into the reasons why I didn't. The daily trend is negative, although a little bit more strength, and this is going to go to neutral. All right, it wouldn't take very much to do that. And then we have momentum positive for the monthly, neutral for weekly, and daily's momentum is still negative. Volatility, both negative. I'll go into that in a second. And then overbought, oversold is kind of hanging around neutral. All right, so we've got a pretty volatile period. Look at the movement. Now, we started to see some gaps back here, right? I mean, no gaps in here. And we have a quiet kind of, not a quiet, but at least a really orderly bull trend, right? And then from that point, we started to see some movement. Yeah, we had one leg up, but from that point on, it's been incredible how many gaps and big bars, and that's what's causing this to go up. So it's a very difficult market. If you're trying to swing trade, you're probably really having a tough time. Unless you're playing these deep oversold readings, you get this oversold and you're saying, hey, I'm going to take advantage of that and buy some calls or, something like that. Then maybe you're having some luck with it. But typically, it's just not, I would say, all that advantageous environment if you're playing something that has a tighter stop right now. Now, on the weekly, we're actually getting, because of these 2 weeks growing in size in terms of the size of the bars, we're getting this average true range to go up again and and maintain this kind of high risk level for the S&P at this point. All right. So just something we want to watch weekly, because when there's rising volatility, there tends to be rising risk in the market. And when there's declining volatility, that's usually a good sign for the market. When this is dropping, typically that's a sign of lower risk. When the volatility is going up, it's usually a sign of distribution. And when you combine that with a loss in momentum, it definitely is something we have to pay attention to. Now, it hasn't paid any real dividends yet. All right. And it might not. It's possible that, again, this could just turn into a trading range. Maybe this just takes off like a crazy market and just goes north and just does something, that's, I would say, would be pretty irregular at this point based on the indicators, right? I think it would be a little surprising based on what the ADX is doing, based on the high volatility. But, anything's possible. We have to stay on our toes in here. Let's switch over to the 4 time frames. We're still stretched. You can't, so market can turn around and go up, but that's not going to change this, right? We're still stretched. There's still a higher risk level. And when I see that stretched, it's not an automatic sell, but it becomes a lot more concerning when the momentum on the ADX starts to die out. And again, I'll just show you this again, just so we're aware. So if we go back and look at what happened here. This was the volatility really increased here in this time frame. This was before the bear market in 22. We did lose a little bit more momentum in MACD, but look at how this died out on the ADX. Same thing that's going on right now. So it's a concern. Same thing here. You see how this pushed to new highs into early 2020, and we hadn't gotten the ADX going here. You see how that was low as well. So it's something we want to watch. Now, it doesn't happen at every peak, but when it does happen, we want to be on the lookout for it and just be aware. All right. So that's what we're doing right now. We're just being aware. Now, let me just show you what took place here, because we had a break of the trend line. Yeah, you can draw this trend line from here. You could draw it from here. You could do that if you want. That's fine too. But we broke that. We broke the trend line. We rallied back, formed the 2, came back down, tested this, rallied up again, and then came down and took it out. Now, if you notice what happened, we took it out one day, and then the following day we gapped down and reversed back. Okay, so very little follow through on this. And just realize, once we take out the 3, so 1 is breaking the trend line, 2 is testing, and then 3 is here completing the 1, 2, 3 reversal. That is only presumptive evidence of a trend change. All right. Now we have to make another lower high and another lower low to confirm that. This is right out of my course. I go into this in detail. So we actually need a 4, right? We need an additional move down to confirm. Now, the reason why I felt like this was going to be so important was what's going on here, and look at the momentum condition. And then if we go back to the weekly, I felt like if we took out the weekly bar, this was the first time going back a year that we broke the 18 with one bar and closed below it. And then the following bar, you see how this didn't close, this didn't take out the low of that bar. And then this actually came back and closed above. This one closed below, but then we didn't take out the low of that bar. All right. This is the first time we closed below it and we took out the low of the bar. But now look at how it did it. It did it via a gap and then snapped right back up. So the low of the week literally was the gap down. All right. Now, I mean, typically in the way I talk about this in my swing trading courses, if that happens, we're looking for a rally and then we want to take out that open to really confirm. But the reality is that we broke the 18 week. Now, it might not have any follow through. This might be the shortest 1, 2, 3 of all time. So we're just going to have to see if this can push through this downtrend line. Then we've neutralized the pattern and we're into what I call a transitional phase. It's a transitional phase where we're back into transition. We don't have anything definitive in place. We probably are looking to see if it goes to a new high, then we got to adjust our trend line again. If it fails to go to a new high and comes back down, then we got to watch this low here like a hawk. All right. So that's kind of where we're situated right now. The hourly really isn't that helpful. It looked like it was showing some strength to the downside. Now it's trying to push to the upside, but it actually doesn't have that much strength behind it when you look at it from an ADX standpoint. So we need a little bit more follow through. We're going to need to break this downtrend line or fail at this trend line and turn down, and then we get a little bit more confirmation. It's a little surprising to see the strength here in the ADX have only one bar of continuation. But remember how I started this thing. We saw one of the biggest shifts in sentiment that I have seen in 30 years. So everybody turned bearish, and we got a whole bunch of people probably got short on this gap down or something like that, and now they're scrambling. All right. So I think that's what's taken place. Let me know if you have any questions. We'll see you next time.